I would agree with you, absolutely. The question is, who do you trust? And the analyst is the person that should be trusted, because there are big brands out there who've already got credibility, so therefore they can leverage that. But at the same time, if you're going to trust somebody, you've got to know that the advice they're giving you is going to be the best on the market. It is going to be helpful. It can't just be gained from having worked solely in the analyst industry. It can't just be gained from talking to vendors.
I know this is a passion of yours because we've talked about it probably for 10 years now, that the role the community plays in this conversation.
Yeah, well, on the point that you were just discussing, which is in my head right now, the average experience level of analysts which have been hired into the larger corporations has gone down over the last several years dramatically. And, you always have an 80-20 rule in many industries in terms of quality. 20% of the people provide 80% of the output or whatever. In the case of this industry, it may be 70-30 or even 60-40. But just having analysts right doesn't help you. You have to be able to get to an analyst. You cannot get to an analyst today, to the large companies, who is among the top of the spectrum, because they're generally committed to the very largest clients, and they don't have the time, and they do a lot of marketing, et cetera. So the analyst model, per se, I think, needs to be revisited for all companies. I don't know if I've sidetracked a little bit.
Yeah, no, not at all. So I would agree. As a matter of fact, if anything, when it comes to business decision makers, my experience was, IT people liked reading research reports and were comfortable with that delivery model that you championed. Business decision makers perhaps look for a little more accountability.
You have to do some research, and I presume you've done it or you're doing it. You have to decide what the parameters are that will make for a business-oriented analyst, or to take a group of analysts, some who have the technology experience and some who have the business experience, and merge them together and perhaps have people who integrate their capabilities so that when people have questions, they can approach a team of people with various backgrounds, as opposed to only having access to a single analyst, et cetera. These are all small details, but there's so much that needs to be done.
But when you say small details, we were having the conversation beforehand. As I said, the vision's not unique. It's a small matter of implementation. From your perspective, where have people stumbled before, and what is the real opportunity? Is this one where, when somebody hits the formula, Gartner's vulnerable?
I think it is. I think people deal with Gartner because they have to. I don't think a lot of people enjoy dealing with Gartner. They are the biggest firm in the market. They enjoy an unparalleled amount of power. But who's the second choice? Because if you're going to invest the level of money that you need to invest with a firm like that to get the advice you're looking for, then you shouldn't just be taking that one person's advice. You should be turning to other people as well. But I think the industry as a whole has failed. The analyst industry has failed abysmally to actually figure out a way of competing successfully with Gartner. And that, for me, is the single biggest challenge. Because I think right now, the analyst industry is facing an awful lot of threats. 2 years ago, I said the analyst industry was dead. I've revised that view slightly now.
I'm glad to hear that. Yeah.
But the point is the same. If you look at influence, that's what analysts are all about. It's advice, it's influence. And actually, analysts, I think, for too long have assumed that they are the experts in the market. And there are other people out there now who are becoming expert and have got the voice and are getting that share of voice. So, yeah, there's an opportunity there, but it's got to be executed on, and that's what it comes down to.
So when you're writing the research note about, the vision Mark is portrayed, how do you evaluate our progress? What are the things you're looking for from us?
I would love to see consistency. I would love somebody to say, we know who we're selling to. We know what they need. This is why we are delivering research, consultancy, whatever service it is, rather than saying, you know what, this is what we sell, therefore this is what we're going to try and persuade people to buy. And I'd love somebody just to execute on that strategy and not change it every 12 months.
There is a model in existence that addresses your issue, I think. And if I could take 3 or 4 minutes, somebody ought to implement this model, I think, for advisory, but it would take a lot of moxie. It's the Wall Street model, where if you take a company like Citigroup, which has portfolios, and they have analysts and portfolio managers, and they need advice. So they go to the sell side of the street, which is Morgan Stanley and Goldman Sachs and a whole bunch of others. And they select the best, they work with the best analysts from every one of 30, 40, 50 different brokerage firms, large and small. And they don't pay them up front either. At the end of each year, they, every one of the firms, such as Citi, votes on who has been most helpful, and that determines the commissions that are fed to these companies in the succeeding year. So instead of paying somebody up front, people are paying Gartner $1 million and more, and I think there are 80+ companies that are doing that. Nobody knows whether they're getting value for their money, and it's obviously very variable. This other model, you pay for what you get, but all the small companies do very well, and the very good ones grow in terms of. So there are models which can be developed to resolve the issue that you have as a user.
So are you optimistic?
If you implement something of that sort.
Yes. So
yeah.
Are you optimistic for this industry?
Well, when I started Gartner, the industry, I don't think was going anywhere. Yankee obviously wasn't going anywhere. Input folded. DQ had to sell. The growth that we've seen, I don't know if it's 2% or what. I thought it was more like 6% or 7%. But the price increases have been 3 or 4 or 5% per year. So the real growth was about 1 or 2%, perhaps. Obviously, when the economy improves, the results will improve. But I think right now there's a huge amount of overcharging for what people get. And if people really study what they're getting, I think they should ask some serious questions and negotiate harder if they can. And many of them just can't.
Except with us. Well,
Users. I won't be invited in New York.
no, I think we'll continue this conversation in New York. Gideon, a pleasure as always, David. Thank you for your time this morning. Thanks.